right there, everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. I hope you are doing well, no matter where you are located around the world. I just wanted to say, first of all, that I seem to be coming down with the flu at the moment. I'm actually struggling to talk. I'm losing my voice a little bit, so I'm not sure how long this is going to go for. And again, it might seem, or at least feel, sort of a little bit congested, and that's the reason for that. All right, so just wanted to point that out for you before we move into the analysis. But here we are anyway. You can see this is the chart of the S&P 500. We closed up another 13.44 points today. The interesting thing about the chart at the moment, though, is that we still do not have really what is considered that of a definitive sort of breakout. And again, what we're starting to produce is a series of gaps which are still not really seeing that of the really white long day Morobosu candlesticks that we'd like to see after a gap, i.e. continuation. What we've been waiting for is that legitimate signal, right, whereby we know that the markets are trending. And as it stands, they are still a little bit flaky. We're starting, of course, on the S&P 500 to flinch up above 3,000, the psychological round number. We actually pulled on back down from that. And again, we were left with that of a spinning top candlestick as at the close today. So again, we're sort of 50-50, at least the markets themselves are like 1 foot in, 1 foot out. And we still don't have that true sort of commitment of the markets essentially breaking out and establishing that of the legitimate trend, which is going to linger for a number of months, probably for the entirety of the second half of 2019. Now, as I see these gaps continue, right, and also the candlesticks soon after, whereby we're not seeing the immediate follow through, it makes me sort of ask the question whether or not, again, we're going to come back down and close the original gap, which is really established out of the trading sort of behavior since the beginning of this month. Okay, so pay attention to this. I sort of spoke about it, I think on the first video of this week on Monday afternoon as at the close. And again, this target down here at 2,950 is legitimate if in fact we do not see the continuation above this resistance area. When I show you it again on the Dow Jones Industrial Average, you can see that we poked our head above that of Wednesday's candlestick last night. Really, my voice at this point in time is just holding on. So again, my apologies. But you can see we've got a little bit of a hangman candlestick. This is going back to Thursday. And today, all right, we're sort of flinching up above and in between those of the candlestick bodies of these two particular sessions. We got the little bit of a push above, but we couldn't hold. And we sort of reversed intra-session. We closed up 76 points. But this is what we call a high wave spinning top candlestick. It is also that of a pseudo type of gravestone doji, or even that of a shooting star. Yes, we do have a little bit of a lower wick, but it's not the best of candlesticks that you want to see up and around a resistance area. Now, when I flick on over and push number 5 on my keyboard, the ADX is still elevated, which is good. The CCI is still technically trending, which is fantastic, but we haven't seen really that definitive breakout that we're looking for, as I've already alluded to earlier in this afternoon's class. The Nasdaq is a little bit of a different story, and really, this is buoyed by that of Amazon at this particular time. Now, I'm going to move into Amazon and also Google because those two particular stocks are doing quite well. Apple also actually filled its gap, or it's trying to fill its gap. But the Nasdaq, it closed up 60 points today. And this is looking, at least, if you were to see a gap, like I've already pointed out on the S&P and also the Dow Jones Industrial Average, this is the type of candlestick that you would want to see follow, very soon after. Again, this is what we call very close to that of a long day Morobosu candlestick, up 60 points. And we are starting again to close above this little swing high, sort of rounding top over here that we've developed over the past 6 or so sessions. So of the three markets at the moment, tech is certainly the strongest. Maybe it is going to lead if we are moving into a legitimate breakout as at the close on Wednesday. But again, I'm a little bit apprehensive on the Dow and the S&P 500. I'm not calling for a reversal whatsoever, but it does make a little bit of sense if we were to see these other markets close some of their respective gaps prior to finding support at these rising exponential moving averages, which would then act as the trampoline to propel price higher. Otherwise, again, just keep the insurance policies open in your trading accounts. You can see if I just zoom on in, 27,062 on the Dow Jones Industrial Average. In fact, today we tagged 3,000 as I already spoke about on the S&P 500, but you can put in 3,005 if you're not already in at 2,971 or 2,913. The list goes on. And also, I think I've just covered the Dow Jones, but again, that continuation entry on the Nasdaq is 8,221, which we actually tagged today. Choose, I'd say, one of the three, if not two of the three markets to have exposure to. Otherwise, and outside of that, you should be looking for individual exposure into our top 12 individual trade list. Now, I wanted to point out a couple of stocks. Amazon is breaking out. You can see here, 1,977 was the entry price. This was after the original entry at 1,828 and also 1,896. So this is just continuing as expected, and it's really producing, or at least it's really starting to move quite deeply in the money. We've got sort of earnings coming up, which means that we're going to have to sort of liquidate these positions. But as it stands, it's still quite a decent trade. It's a very profitable trade anyway. And if you wanted to, you can more or less sell, a portion of those positions now, right? And bank some of that profit and just let the rest ride. But it's really going to depend, obviously, on what the markets do. Now, what's interesting also is what Disney is doing. Disney is on the precipice of breaking out. It's been here for quite some time. It's looking like a little bit of a cup and sort of handle. If you can see that on my screen right now, that actually illustrates quite well. 143.83 was the continuation entry. We're up at 143.54. So it's sort of flinching around that area, but it's certainly the first time where Disney is really looking to continue above the reaction of that earnings call going back to the month, of April, as my voice again continues to go. CCI is still in there. Pardon me, everyone. I apologize for this, but you can tell I'm kind of struggling here doing this, but all for a good cause and all for a good reason. The ADX is still elevated a little bit up at 40, but this is still technically showing every signal that it wants to continue in the bullish direction. All right, whether you look at the oscillators, the short-term exponential moving averages, the trending indicators, can't really look at the sort of the alligator jaws. Those are the Bollinger Bands at the moment, but it's still a phenomenal trade. It has been. And the last position in this was 137.29. We're already up at 143.54. So it's sort of like a stealth bull market underway with that Disney stock. Here's Google as well. A lot of people have done quite well in this trade. 1,082, 1,109. And most recently, 1,132. We're up at 1,140 at the moment. I think now we're starting to get the confirmation of that W, remember? And you can go back and have a look at videos during the month of June, because I was speaking about this trade setup at some point during the formation. It was probably around these 3 dates, I assume, over here. So just read them out to you. It would have been around the 17th, the 18th, or the 19th of June, I assume. If you go back in the catalog, you'll see the analysis on Google, and we're talking about pulling back, establishing a higher low, and then breaking above the neckline, but also front-running the trade as more and more people understood what was going on. Well, this is now the tipping point here on the share price of Google. So now we've broken out. We're breaking above the neckline. And things are looking good on this particular trade. The next resistance area is all the way up here at 1,200. For those in at 1,082, congratulations. We do have earnings scheduled. So I just wanted to point that out also for you. IBM shooting star candlestick today. You should close out of this trade if you're in at 132, 135, or 136. Be done with the trade, honestly. Close it out. It's run its course. It's finished. Just skipping through a few others. Boeing Airlines, not the biggest of days. Baidu was still moving largely sideways. Caterpillar, you should have been out of last week, up at the target at 139.81. Now we're looking for a re-entry in the bullish side, but it's not here yet. We may have to sit through earnings. Just really putting that one out there as well. And also, obviously, I need to rotate this formally into our top 12 individual trade list, but obviously Microsoft, okay? Still not above 139.07. It looks like we have, again, you see this the sort of theme at the moment. It's upper wicks. So the markets have upper wicks. Individual stocks have upper wicks around resistance areas. Some have just broken out, which is good, i.e. the tech stocks. But besides that, again, we're still 50-50 as to whether or not this is the legitimate break on the market, so whether we're going to close some of these below-mentioned gaps that I've just not only referenced today, but spoke about most recently anyway on Monday's video as well. All right, so on that note, everyone, I'm going to leave you and make myself some tea and stay warm and try and get over this little flu that I think I've picked up. All right, all the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.